Now let's take a look at some seasonal trades, and let's look at some trades that are seasonally setting up that I call on the horizon. So kind of part of the plan that I look to is put together, we can look at with these statistics, I can go 60 days out. So I can see what's coming up, and I can look back at prior statistics too. But we can always then be ready. We can build a watch list and then be ready for when that trade tends to kind of have a seasonal either move up or down. And then we're going to use the trading model, momentum indicators, to help us catch that seasonal wave. So let me kind of piece it together for you here. So first off, I want to show you a seasonal trade that just came and went on a July contract. So this is what it'll look like, these statistics. So here it is, July 2022 trades. All right, so out 60 days, I can go out and look. And if you look at this, just to go back in July to show you the performance based on the seasonality. And then I'll show you the performance based on the seasonal trend, but using a cycle model to give a better timing entry or exit. So first off, just look at all the different trades. I mean, there's just a massive amount that you can do. So here's one, natural gas, December contract, soybeans, Eurodollar. Here's a really powerful one. So there's going to be something for pretty much everybody. So think of it, if you've never traded any commodities or futures at all, but you might say, oh, wow, look at the S&P. Well, I could have done that. I could use SPY. So look at this one, 100%. So out of the last 15 years, these stats are based on a 15-year continuation roll. So you can see the winning years right here, this column, 15 years. So it's had 15 winning trades. So it shows you seasonally, based on their seasonal model, when the entry happens and when it exits. All right, so you can see the seasonal entry was on the 2nd of July, and then it was out the 22nd. Now what I do is I look at this, I say, wow, that is fantastic. What a strong trend. But, it might not happen again this year. So what we're going to do is we're going to use, we know that, okay, it's like you're laying in the weeds waiting for the prey, right? So based on these statistics 15 years back, that the S&P 500 is going to be seasonally high probability that it'll go up early July into the mid-July. But to confirm that, we're going to use the momentum indicators to align with that. So I'll just pull those up real quick, and I'll just put it on the S&P futures, so kind of in line with this. So if we look at the S&P futures, and I go back to July, right in here, so July 2nd, right here, so down below, right here, our model would have gone long right here about the, let's see here, right here, I've got it going long here. I can get it more fine-tuned for you, but it was long here on the 15th. Okay, so I'll mark it for you so you can see. So the model that I use here, see that these two arrows, that's a green and yellow arrow, that means cycle 1 and 2 are positive. We had a cycle reversal. So that's where I would have had the entry. I know that the trade looks like potential for a big move, but I want to have the best entry as I can in order to, not have to fade any equity swing. So right here, the system would have gotten in right there on the 15th. And this is also what we call volatility squeeze. So this was a really juicy trade. And then look where it went. So from the 15th, using the trading model, it then had a fantastic move up. That's into the 200-day moving average, stalls out there. So again, we're using the seasonal trend, but I'm looking at my other indicators that I use. So there's a 200-day. I know it's probably going to fizzle out, and then sure enough, it fizzles out. Momentum shifts, cycle 1 and 2 go down. So let's take a look at that aligned with the seasonality. All right, so let me pull that over. So we're trying to catch this wave, right? And we're going to see if it happens again. Now, sometimes that can happen earlier or later. So you can see here, this was on the 2nd, and the system that I use got in a little bit later because it was a better entry based on momentum, but it still caught that wave. So here are the breakdown of the statistics. It really gets detailed. So you can see when you dive into each year, you can go back and look, all the way back to 2007. So you can see again, here's the marks the trade entry on the second, around the 2nd of July, and the exit around the 22nd. All right. So out of those 15 years, 15 winning trades. Now then you can see the entry price right here was right here, bought at 43.4275, and then got out here at 43.5975. So 16 points, 16.75 points. So if you did one contract, that was $837.50 on the S&P. Now you don't have to use the S&P. You can use the SPY. You could use SPX. But this is showing you those statistics based on the futures contract. So in 2020, though, look at that. It had a move of same entry dates, but it had a move 136.50 points. So this was a one contract if you did was $6,825. So pretty amazing stuff, and just does a lot of the kind of the statistics are really helpful in my opinion. So then we look at the other thing that is nice. Here's your window when that seasonality tends to trend. So it really makes it very defined for you. You see this, the blue line is your kind of where the market is now. That's the trend. I'm sorry. And then here's the price action right here. So you can see it came down right into that early July, kind of goes flat, and then we would have gotten in right here, and then you see that seasonal trend. So there's that kind of window. So really good information there. Now, here's the chart I just showed you on the actual chart. So the power cycle trading model would have been in on the 15th based on that momentum signal. Okay, and it would have stayed in longer. It got out the 19th right here. Whereas if you look at the seasonal trend, it got in the 2nd, a little bit earlier, a little bit worse price, and it got out earlier on the 22nd, so it didn't hang in as long. So that's the really great thing too with momentum, is that we can maximize profits better than if we're just blindly following these seasonal trend kind of dates.